We've got this news out today with Uber, and that does relate pretty directly to the Lyft IPO that we're expecting later this week. So first of all, what do you think about the Lyft IPO and what that tells us more broadly about Uber and the competition between the two?
Well, definitely it's more of a David and Goliath story, especially after the announcement of Careem for Lyft. I do think that some investors like investing in the David versus the Goliath, but Uber is certainly becoming more and more of a Goliath in the ride-sharing sector. Uber also is a much broader platform company and is a competitive force in all sorts of areas for Lyft, in technology, in all the mobility spaces, in autonomous vehicles. They're way further ahead. So I think Lyft is going to be easier for investors to get their arms around, but Uber is going to be a much more sensational IPO.
Just in terms of those two, we were trying to get, I don't know if you know the details on this or not, and again, I'm sorry for kind of springing this on you, but we were trying to figure out what the convertible notes in that deal with Careem value Uber shares at. I had read $55 a share, but I don't know what that means in terms of a market capitalization for the company. I don't know if you do.
I do not. I haven't had time since this broke early this morning to really look at the full value of the deal and how that's valued against their IPO.
Reading between the lines, it sounds like you think Uber is potentially the better investment. Is that fair for me to assume?
Well, I think mobility is still the Wild West. Definitely, these are companies where it's pretty mushy on when they'll achieve profitability. But definitely, ride-sharing and Ubering has become part of our vernacular. I don't think Uber is ever going to go away. I think it'll be well supported by shareholders. And I think it will be a stock that you'll have to hold for a while to really see the company reach its full potential, even though it's so highly valued today.
So it seems to me that the Uber big bet is that it becomes a natural monopoly, that it becomes so large that it becomes dominant and it scares off any new entrant, including in the Middle East. To you, does that make sense? Does Uber have the ability to become a natural monopoly, and will regulators tolerate a natural monopoly of that size?
I think regulators are worried about other issues than monopolies here. If we look at mobility as a broader platform and we look at items like autonomous vehicles, we look at even the smaller versions of mobility like the scooter businesses, there certainly are more than a dozen startups already out there, some that have achieved scale around the world. Whether a monopoly in a particular region is regulated differently than a global monopoly, that's a different story. I do think that all in all, the tech business is having increasing regulation, and Uber and Lyft are already in a heavy regulated sector.
And one of the things that's going on with all of these big IPOs of these unicorns, multi-billion-dollar valuation companies, is you're getting a test of the public market's appetite for some of these business models that really are not necessarily just kind of pure software and network effects and all these other things that we came to think of as this kind of magical value-creating things, right? It's a very kind of real-world, moving people around, delivery businesses, things like that. Do you think there's a lot of risk here? Because it seems like it's the backers, it's the private investors that are dictating the timing of when these companies are going public. So there is maybe a little bit of a who knows, maybe a mismatch in terms of what the public's willing to pay for these?
Yeah, that's a very good point. I think the traditional software business, which has done extremely well, especially enterprise software companies like Salesforce, even Microsoft, new companies like Okta, these companies have really been easy to understand. They have predictive revenue streams. They have routes to profitability. They have large TAMs that also scale. But we really are talking about different animals with Uber, Lyft, and even Airbnb, although underlying all these companies is a large software platform. I do think that it will be challenging for investors to determine whether these companies are making real progress. If you also look at the timelines for profitability, they're very, very hazy for Uber and for Lyft. I don't know about Airbnb. They haven't gone out with their S1 yet. You look at other offerings such as Pinterest. That company is more like a traditional advertising content company. It has some of the same metrics we've seen in previous companies. It has a route to profitability. It's a tidier company for investors. But at the same time, retail investors like the brands that they use, and retailers are using Uber and Lyft, and classifying those companies as a set almost. I think investors will invest in both versus just one. And I think that it is a big question of how much patience they'll have with these companies and expectations over time of what the business models will turn out to be.
And what did you think of Apple's display yesterday? I've heard some people say they loved it. Others say Wall Street kind of panned the whole thing. What was your take?
Years ago, Paul Allen invited about 100 tech people, software people like myself, and 100 Hollywood people on a 3-day cruise to try to mix and match Hollywood with Silicon Valley. And the announcement really reminded me of that cruise. It felt like Hollywood visits Silicon Valley. I think it was a well-done announcement, but it didn't have much surround sound in how this affects Apple's business. I would say that it probably is the beginning of a long drumbeat of services that Apple will continue to announce, and they'll march across other verticals like healthcare, for example, with similar events.